Hello and welcome everyone to the Capital Mind podcast. If you'd like to know more about us, visit capitalmind.in, and if you'd like to invest with us, do visit capitalmindwealth.com.
This podcast is for informational purposes only and should not be relied upon as the basis for investment decisions. Clients of Capital Mind may maintain positions in the securities discussed in this podcast.
Hi folks, welcome to Capital Minds podcast episode number 40, and this one is a new one. You'll love it. This is about how Smallcase helped create a new generation of investors. Now, I have with me the founders of Smallcase, Anugrah and Vasanth. Welcome to the show, guys. So I want to start off with saying, Smallcase has been a tiny company in 2016 to now what is almost like, have you small-cased your portfolio yet? So from there to here in a big way, and we've got news of a funding round that happened just about, I think the announcement was just about yesterday, when you had a $40 million round of investment in your company, which included Amazon as well. So we'll talk about that a little bit more in detail. But it has been quite a remarkable rise for a company that started in, I think when I first met you, it was 2016 in Zerodha's terrace at the time, and I think you guys were starting to operate at that time. And at that time, it was quite interesting because we went in. You started off really as an interesting take on the basket order of Zerodha's Kite at the time, which was you invested in a bunch of stocks rather than in a stock at one time, and you looked at the bunch as a basket. So you called that basket the Smallcase. It's become a household name now, but at that time it was relatively new. How have you, if you think about the basics of Smallcase, okay, now a lot of people understand it, but I think the path from where Smallcase was at that time to where we are today, which is so much more beyond Zerodha, beyond thinking of it just as a basket order of stocks, to it's now a publisher ecosystem, and you've got advisors and RAs, and as a disclosure, Capital Mind has a momentum portfolio and other portfolios also now on Smallcase. We have a lot of investors who are using Smallcase to invest in our portfolio, so we are also a biased and therefore happy participating member of the Smallcase ecosystem. But how did you evolve from that time in 2016 to where it is now?
Awesome. Thanks, Deepak. Great to finally be here. Thanks for having us on the podcast. I think, yes, when we started, it was, very much a workflow optimization versus anything else. Like what we observed and understood was that a basket order or investing in a portfolio was a very broken and cumbersome process, right? So you get your list of portfolio constituents from somewhere, you go to your brokerage interface, you invest in it individually, because many brokers didn't have the concept of basket orders as well. So each order takes you at least a minute. If you're executing an order of say 20 stocks, it would take you half an hour. Once you've executed them, you need to track them as a separate sub portfolio in your entire portfolio. Most brokers don't offer that, which is where you go to a portfolio tracking app, spreadsheet, enter all the trades again, track them as a separate portfolio. Tomorrow the list changes, your portfolio gets rebalanced, you want to remove a stock, you repeat the entire process all over again. So you're using at least 3 different portals or apps. Broken process, takes you a lot of time, very inefficient and cumbersome, right? So I think the first version stemmed from there to say, can we make portfolio investing in stocks easier? And post that, it was just more natural progressions one after the other. So we launched this workflow, and I think what we realized also is that it's important to give people the set of ideas themselves, like not just keep it open-ended that people create their own portfolios. So the first version of the product, which we launched in 2016, had I think 35 small cases or portfolios ready-made. You can discover from them, invest in them in a click, track them with a real-time value, and then manage them. And from there on, I think we've just taken the path that where we got feedback from both from our users as well as our partners, because the user said next, okay, I would like to add or remove stocks in a small case that I've already bought. And we felt that's great. This is a instrument that kind of offers that optionality, so we should build that feature. Then people said, can we customize a small case before buying it? We built that. People asked for, can we create our own small case? What was the ideal version? We built that next. And many more features like SIPing into a small case. We thought that might not be maybe a relevant use case for this product, but then that's a very strong use case today for anybody who's buying a small case. They just buy an SIP into small cases. So I think it's a lot of it has also been deliberate from our side. Many calls that we've taken back to back, right from making small case a common noun, right? It's not a platform. It has always been an instrument from day one, because just how we call small cases or how we write small cases with a lowercase s. So all these have been deliberate calls right from day one. We've realized that we are productizing this versus just and making this a new ecosystem or a new product class in its own versus just making a workflow optimization here. So yep, I think that was on the feature side. I think on the platform side, a lot more. Anugrah, you want to take that?
Yeah, sure. So as Vasanth mentioned, in terms of features that we were picking, they were primarily coming from whatever users wanted or whatever partners wanted, right? But in terms of how we go about building our product as well as the associated technology, most of the things were deliberate from the day one. We have a third co-founder also, Rohan. He is our CTO, and he takes care of all the technology stuff at Smallcase. And he had an experience of working in an institutional setup where a lot of similar things used to happen. So that sort of helped us. But from there onwards, from the day one, we wanted to ensure that every single decision that the customer is making on the platform is happening on a portfolio level, not a single stock level, right? And also at the same time, given that we believe in the open architecture and transparency, he should have an option to go further and see what is happening with individual stocks. But if it doesn't want everything from a risk perspective as well as returns perspective, all the decisions should be taken on a portfolio level, right? And like if one goes and sees our platform, that's how everything works. In the sense that you don't search for stocks, you search for portfolios, you search for strategies, right? The different kinds of orders that you can place on brokers on single security, now here you place on portfolios, whether it's a partial withdrawal or whether it's a SIP, as Vasanth mentioned, right? All the orders are again on a portfolio level, right? And most importantly, the tracking, right? Because to give a multi-portfolio tracking where the users are able to calculate total returns also, right? It's not an easy thing, because you have to ensure that a lot of other stuff like corporate action adjustments, right? If one stock is present into multiple portfolios, right? How do you ensure that if a corporate action is happening on this stock, you calculate the accurate returns of each and every portfolio? On top of it, we also support liquid ETFs, which a lot of advisors on our platform uses for giving weightages to the cash position, right? Ours is probably the only platform in India which provides you the tracking for daily dividends which are announced by the liquid ETFs, right? So that you are actually able to calculate the total returns, which includes dividend, which includes let's say fractional dividends coming from liquid, as well as are adjusted for corporate dividends, and all of these things gets adjusted, and we calculate a custom index for the user, so that at the end user just comes on the platform, sees that okay, my index value has gone from 100 to 110, I'm making 10%. But this is all that goes beyond like behind the platform in terms of calculating and deriving that return. So yeah, that's how we have been thinking about all the decisions on the platform side and as well as on the technology side, that finally we have to ensure that every decision user is able to take on a portfolio level, because that's the best way from a user's perspective. Because like that's how, like if the user is not diversifying, then probably he should not be
in the small case.
in the small case.
No, I think this is, I mean, if you look at it as a small case user, and I've been both on all of these, is the simplicity of saying, listen, I just come here and I invest in something which contains a lot of stocks. I mean, earlier used to call them, let's say, mutual funds, but mutual funds, I think, box themselves in because they did a few things, as even SEBI said, Acha, this mutual fund cannot be like that, and certain mutual funds can't be like this, and so on. So the economies of scale doesn't work out for a mutual fund to do 500 different things, but there are certain things which are maybe short term, or certain very thematic in nature, specific themes in nature, which you introduced as part of the process, and that brought it in. Now, this thematic investing itself has been kind of very interesting because it's not necessarily new to India. It's been seen westwards in other startups. The most famous of them, I guess, were Motif Investing in the US and Covestor. Both of these had limited success in the US. I think Motif and both were sold, and then they weren't continued in any meaningful format. Um, so but in comparison, Smallcase has taken on a different trajectory on its own, and it seems to be in a far better position than any of those were in the past. And you probably looked at those startups much more closer, in terms of how they evolved and so on. So what is it about India, or is it about the Indian market, Anugrah? If since you've seen this market closely, how does it compare, and why, let's say, to ask you, maybe, what are you doing that's so different from the Motif and the Covestor spaces that makes it possible for a small case to grow substantially more in India?
Sure. Actually, like a lot of things that we do are very, very different. And uh, if we specifically talk about Motif, right? So Motif was providing an end-to-end customer experience where they were more of, let's say, a thematic investing platform, and they had their own brokerage, right? Now, what we do is very different in the sense that thematic small cases are just one set of small cases which are available on our platform, right? It's not that we only provide thematic investments. There are multiple different types of small cases which are available, and the biggest difference is that we are not a broker, right? We work with brokers, right? So as you know, we have 12 different broker partners with whom we have integrated, and the customers of all of these broker partners, right, can start their investment journey with a small case, right? So this is the biggest difference, that we are not providing an alternate to that. Okay, if you are a Zerodha user, you cannot invest into a small case, or if you are an HDFC user, you cannot invest into a small case. You will have to come and open an account with us, right? But what we do is we partner with them. We ensure that irrespective of your broker, right, if you want to have a long-term diversified portfolio exposure, a small case is available to you.
I see. So it's like a combination of, brokers may have the customers, but you have the investment strategy that, or rather, the broker may just be the pass through, in the sense this is where they actually execute their trades. But the brokers in general, some of them have, for instance, Zerodha, I think, does not even offer like services like, Acha, I'll help you invest in certain stocks. So Zerodha doesn't provide that. The new age of brokers don't. They say, listen, we are transactional platforms. You decide what you want to invest, how much you want to invest, but you solve that problem, saying, since you don't know what to invest in and how much to invest in, that comes from a portfolio approach. Some of it is quantitative, some of it is qualitative, subjective. You built internal expertise initially on this process, and I think one of the things that you do differently is allow publishers to be part of the platform, which although Motif didn't succeed quite well, Covestor had a different approach where they said the advisor actually trades in his own account. This is not allowed in India for the RIA process. You can't have your own account being traded and then advising somebody else at the same time. But so interesting because, perhaps elements that failed in the US, they don't have a corresponding equivalent in India. Like you said, Motif was a broker. The US brokerage platforms are also far more technologically advanced in comparison with, perhaps when you started off, the most advanced brokers were the new age ones. Strangely, because the old age ones were making money, the new age ones were relatively new. So it's almost so. I mean, so coming to maybe from that part of the expertise, you have multiple brokers. You have maybe I think what 10 or 15 brokers now on the platform. You started off with Zerodha because I think they gave you, and in fact Kailash Nath in his post recently talked about how they built the API for Smallcase because your use case was the most important thing for them at that time. But they also brought in a bunch of changes because the industry started looking at APIs differently. But more importantly, I think Smallcase had a part to play in this ecosystem because you now offer a single authentication process that allows people to say, okay, I'm logging in with this broker. Let me log into the broker and then I can place the order on the Smallcase. So you now people come to Smallcase, log into the broker, come back to Smallcase, place the order. This must have been a technological challenge itself. And then you have multiple brokers at different levels of technological superiority or inferiority, however you may have it. And what did Smallcase do to ensure that you could work? And I know Rohan may be a better person to answer this, but I know you're probably close knit, and of course you probably played a part in dealing with the ecosystem per se. It's not only a technology challenge; it's possibly also an institutional challenge. So take us through what happened over there, or how did it go?
Maybe Deepak, I'll also talk about a little bit about the previous question.
Sure, of
I
course.
think in addition to what Anugrah mentioned, bunch of factors that actually differentiate what we are doing versus what's happening or what happened with Motive, Covester, etc. Uh, at that time when Motive was starting out, I think maybe a decade back, many of the thematic strategies or exposures you could find on Motive, you would get as an ETF already over there.
That's a
So,
good point.
in terms of say getting a certain exposure, it was not required that an investor go through Motive, open a new broking account, and then invest. Today in India, at least why small cases, at least one reason for why small cases are finding more adoption traction is that some of the use cases or exposures you find on small case are not available in any other form factor. Like say for example, momentum, what you guys have a strategy around, that's not present in many other form factors. You also have a PMS around it, but apart from that, you don't find many mutual funds or ETFs that provide a momentum exposure. Corporate governance as a strategy, platform oriented business models, recent IPOs saying
Yep.
that that could be an interesting strategy. So there are a lot of sectoral, thematic, model based strategies that you won't find in other formats, which is where today's small case is finding that adoption. I think also now in US that same concept and offering is coming back. So a lot of brokers are building what they call now direct indexing. It's becoming the new playground, and there it's for a different reason. It's not just it's in a way connected to the exposures, but clients have become so savvy there that now they're saying, okay, I work at Facebook, for example, I have Facebook stock. Now I don't want to buy the S&P 500 because I already own Facebook, which is where say direct indexing is becoming a way for someone to say, the advisor to say, okay, I'll remove Facebook for you if that person doesn't believe in a company's ethos or their ESG policy, for example, that should be removed. So these are the new use cases for direct indexing. I think we've taken a little different approach to building it, but at the core, the offering still remains the
Well,
same.
you are a direct indexing platform for all practical purposes, because I think it's like if I give you a portfolio, you made an index out of that portfolio. You give me back tested returns. You give me forward returns as well,
Right.
and I can invest in it. I can SIP into it. It's similar to that. But you're right. I mean, in the sense, India does not have the ETF depth
Right.
or even the index fund depth, and even though there are 400 indexes, there are probably about 25 index funds in comparison. I mean, just giving you a number. But yeah, sorry. But coming back to the other part of the equation, it's I think from a technological standpoint, the challenge in the US for these platforms would be because US has already had FIX for the longest of times. All of them have adopted FIX as a protocol. India, while we've had FIX, and most platforms, at least the Omnisys and the FT, have supported FIX in different ways. None of the brokers actually exposed it outwards to the population in general to say my end users can use an API. But how did you, for instance, work I think the main thing is interesting is this is the nuts and bolts, right? So I don't want you to reveal any secret sauces that you have, but I think more importantly, as an ecosystem, you got the whole brokerage industry to change. It would have been difficult because who is small case is a question most of people initially would ask, and now it's more like how do I get onto small case? So every new broker we're hearing the newest brokers that are coming or upcoming already talking about small case integrations before they've launched. So how does that work?
No, sure. No, like you said, Deepak, I think, it's not just the technical challenge bit of it. Obviously, that was a big challenge. But before that, getting them to align on the same vision of, building an ecosystem was the first challenge. Getting them to collaborate, because again, this is a model that was not prevalent at that time, right? Today, you see financial services, fintechs work together, build solutions together, build products together. But this was 2016-17, where this hadn't started happening. There was, one Mumbai set of companies that used to operate, one Bangalore set of companies, and they never met or worked together. Today we are seeing a lot of convergence, collaboration, but I think at least in our space, we were the first ones to kind of bridge that gap. And it started. I think we started talking to brokers actually even before we launched. Right, we talked to a bunch of brokers, told them about what we are trying to build with this concept. I think a lot of them saw it as, you're building out maybe a research house, it's another portfolio provider. They already did portfolios, like you mentioned. Many of them have their own model portfolios or their research. So they said, why is your research better than ours? So I think we didn't maybe articulate the concept very well, or they didn't get it at that point. But after we launched with Zerodha, and that's again a case where we were the first institutional use case for their API. So they built it in a way for us. Today we're still maybe the largest institutional use case for it. So I think once we could launch, after all these features that we talked about went live, it started becoming clearer to other participants in the ecosystem what we're trying to build. As in, it's not that we are building another research provider or we are a research house ourselves, but we're building a concept where you need other people to plug in order for that to become more more prevalent, more widespread, more popular. So that's where we needed this to go on to multiple brokers. If you're building a product class, you can't have it on one broker. So I think the next steps were talking to these brokers, articulating what's in it for them, what's in it for us, how does both our priorities get met over here. That took quite a bit. The sales cycle wasn't easy, took us more than a year in many, but got help along the way. I think people were also realizing that like when we started 2015, you would also know number of people who used to call and trade were much higher than people who used to place the orders digitally.
Precisely, yes.
That started changing at that time as well. So a lot of things went into our favor, but I think that's where they said, okay, let's take a call on this, decided to partner and integrate. And post that, the technical challenges started coming up because, like you said, nobody really exposed this. If you look at the top leading brokers, all of them have different versions of their own backends or their order management systems or RMSs. Nobody has a standard one. So either they built it themselves or they have changed the instance of what, say, some of the popular vendors provide, etc. But everybody had their own thing. So what we had to really do was build custom pipes for every integration. Either built by the broker, their vendors, by us, but these are custom pipes built for the Smallcase platform. And what we really do there is deploy an entire platform, both the front end and the back end there. So it took us anywhere from 6 to 8 quarters to go live with the broker. That's with a compliance part, multiple audits, demos, etc. So I think 2016 we launched with our first broker. 2018, which is 3 years back, 2018 July, we were live with still one broker, and today we're live with 12 brokers. But all of that happened in that 1.5 year time span.
Yeah, and just to add to this, right, this is probably one of our biggest moat also, in the sense that when we integrate with the broker, right, today you might see that there are a lot of new companies who have integrated with the brokers or probably with their open APIs, right? But those integrations work very differently compared to how our integration works, because we integrate. First of all, it's a deep integration, and every time when we are integrating with the broker, right, we are deploying a custom platform in the broker environment, right? So, for example, if you go to HDFC Securities, right, and there you are investing into small cases, right, the URL would be hdfcsec.com/small cases, so something like that. If you're going on Zerodha, it will be smallcases.zerodha.com. So actually, it's a platform deployed inside the broker environment, right? And it's a platform which is approved by the exchange for the broker, right? And every single platform that we have deployed, right, so there are 12 different platforms that we have deployed, right? Each platform offers same customer experience to ensure that when a customer is investing into small cases, the experience is standardized, right? But each platform legally and compliance wise is a completely different property, right? And each platform is separately approved by the exchange for that particular broker, right? Until today, we are the only company in India who has taken this approach so that we can ensure that we are providing a very efficient customer experience, right? As well as when the integrations are happening, they are done in a manner that we can further on top of it build other custom products like gateway and stuff like that, which is only possible because we have taken this approach.
Oh, so the SEBI actually effectively approves each individual platform, or NSE, I suppose. I don't know.
The
exchanges approve the platforms so that you can do some layer of automated investing. Not automated, but I think this is more like you trigger the order.
Not automated. Like for example, whenever a broker launches a front end, right? So like brokers also have a front end and a back end. For example, in case of Zerodha, Kite is a front end, right? Their mobile app is a different front end. And every time a broker launches a front end, it needs to be approved by the exchange. Right. So what we do is we build a custom front end for the broker, which gets approved for the broker by the exchange every time we go live with the broker.
I see.
The reason for this is that you cannot have orders placed to the exchange from a digital interface that is not approved by the exchange. So so like for example, like Anugrah mentioned Zerodha. So Kite is a front end which can take orders. Kite Mobile is a different front end that can take orders. Smallcase is a different front end that's approved so that it can take portfolio level orders.
Got it. So effectively, what you're doing is you are, at least to the world, a place where you have a single interface for being able to place this. But to the exchanges, the responsibility of actually placing the orders has been given to you because you come through the broker, and they have approved the broker front end interface as one. So, for instance, any broker, like you said, has to get an approval from the front end, and third-party front ends are very rarely approved independently by the exchange. Like, I don't think they have approved any single interface that says, "Oh, I will connect to any broker and I will," So
no, that's not possible. Also, like the current framework doesn't allow that. It has to have different
approvals for each process. Yeah, right. That becomes a mode because now you've got the approvals and the brokers have spent their efforts working with you. This is actually very interesting because it doesn't appear like it appears like it's a seamless single interface, but it's like 12 different teams perhaps working with 12 different brokers, each of which has you have to fight the idiosyncrasies, right? Because each broker says, my customer wants पहले Reliance दिखाओ या पहले ये दिखाओ या whatever, so you have to fight those idiosyncrasies and say no, the common interface is better, and at the same time have it approved from the broker as a broker front end interface, so that to the exchange it should not be like Smallcase is the one operating this, because you're not. You're effectively providing the technology, the customer is the one clicking.
Yeah.
And the broker is the one providing the service. You're effectively down. This is,
no, just to add like a little more here. So like, to give credit where it's due, like a lot of credit needs to be given to the brokers also here, right? Because initially it took a little bit of convincing, but after that, all of them actually bought into the concept, right? And they allowed us to deploy a standard platform across different brokers, right? And as well as their compliance teams helped us in terms of getting to the exchanges, getting the platforms approved, right? So in that sense, our partnerships have evolved a lot. That the compliance teams work very closely with our compliance teams when the integration is happening, and when essentially we go live with every broker, right? Their sales teams starts selling small cases. They get trained to sell small cases. They're not selling portfolios. They're not selling something else, right? They're selling small cases. So this is something where a lot of credit also needs to be given to the Indian brokers, that they were open to a concept which can bring all the brokers together and like build an ecosystem out of it.
And what it's also kind of done is also that because we are available and we interface with so many different brokers, there are inherent limitations when we start. But over time, because we learn something from every different broker implementation, that gets standardized everywhere else. So it's everything is user first. What the user wants on this platform, we learn something new that goes on to three other platforms. So together as an ecosystem, it just becomes better for the user because there is shared learning and
Well, this is
these.
great because I mean, like you said, if you build an SIP for one broker,
Correct.
that SIP concept can be then applied. So effectively, if you're looking at the mutual fund world, there's a CAMS, which is a registrar and does certain things, but also provides a lot of technological help. So you are effectively another part of this. Or part of the broker ecosystem where their own tech teams may be struggling to do some of these features, or they may have done the features in a completely different way, and they have to think of different use cases. There's an RM who's talking to the customer. How are you going to interface that versus in your case it's the customer directly coming on, and you may have your own small cases, you may have third party publishers small cases listed on a platform trading through a broker. The broker themselves, like for instance, so one broker actually told me, I love small case because, and I won't name the broker, but he said, it's great to sell to people a small case containing Nifty 50 plus Nifty Next 50 or something like that, simply because it is so much easier to understand. And our own research team sends like 10 stocks and 15 stocks. People don't. It's not easy for them to convince. It's much easier to convince them to buy in. This is the. I think the point over here is also the fact is you've hidden a lot of the technology away from both the end user and the broker. So because the broker's main consideration will be, you don't flood my network with orders, you don't do stupid things like bring non KYC wala customer, use non KYC kind of things in place, don't expose me to liability, create a system which allows people to automatically buy, but at the same time that there is some kind of user interaction. It's not like I've gone and said, "Acha, take my 10,000 rupees every month and keep doing it." User still has to come and press a button, so they are aware of exactly what they are doing, rather than some of the new automated platforms may be actually taking a different route, saying, no, you give us the money, we will automatically invest. Now that becomes more of PMS functionality. It's not allowed by SEBI to be done for people who are less than 50 lakhs and not with this license. But you've not gone. I mean, that's also, I think, a commendable thing, because you effectively provide an execution support, but not automated execution in a way.
Yeah. So just to, let's say, further add to what you were saying, right? Since day one, everything that we have built till now, we have put the customer in the driving seat, right? Because, and we have heard this from a lot of people, right? That they say that, why don't you abstract a lot of things? Why don't you automate a lot of things, right? There should be automatic rebalancing. Customers will be overwhelmed, right? You should not give them so many things. You should not show so many things, right? But what we have realized is that the new investors who are coming to the market, right, or who are starting with the small cases, right, they are not afraid of taking decisions, right? But what they want is transparency, and as well as tools and softwares to support them while they are taking the decisions, right? So we are not afraid of telling a user that, okay, your advisor or research analyst has changed the portfolio, why don't you review it and rebalance, right? What's the harm in communicating this information? Why does it have to be auto, right? Because the customer is investing hard earned money, right? It's probably just going to take 2 seconds, right? And today what we have seen is that people want to have control over things, right? They want to learn, understand, and then invest, right? Nobody these days, at least the new age investor, it's not like they just want to go and invest, right? Which is, a lot of people think like that, okay, everything should be built in a manner that you just show the amount, the customer should click invest, right? So that's not how we think. We feel that he should get to know what he is investing into, he should understand what he is investing into. And if we have to be a little more open in terms of showing him the stock that he is investing in, showing him the changes in the portfolios, or like anything related to that, we would be not afraid of taking those decisions.
Interesting. So, and I know from 2016 to now, if I looked at the top five brokers then, looked at the top five brokers today, top five brokers, three are new gen non-advised based brokers to which is Angel and ICICI. Angel also has gone up, I think, only because of its newer technology and framework that has come in rather than the old stuff. The systems have changed. People have changed. The people of the old said, if I get a brokerage account, that guy has to tell me what to invest in. Now they're saying, no, broker is one level. Advice and thought process of investing is another level. So even we've seen it at Capital Mind, where people are willing to pay for research, which is honestly something that was new to me. I also thought at that time when we started off, it was skeptical, but it's also now they're also willing to pay for our small case, which if 10 years ago I had gone and told people we've built an algorithm that helps you invest, we will overall not be able to, they would have asked us for the algorithm. They would have said, give us the algorithm and we'll invest on our own. Now it's more like, wo sab chodo. In the end, what can you make it simple for me to invest? I understand what algorithm you have, you may be doing it, but it needs to come out in a format that says, okay, there's a bunch of stocks, there's a bunch of quantities, and you need to be able to invest in those at the time. This is interesting and leads on to my next question, perhaps. And so it's people like us who are providing research portfolios for whom customers were coming back very often and telling us how can we invest in this, and we would say, so we'd build all sorts of little software which worked only with one broker because it had an API, another broker maybe because when it introduced an API, different this thing. The idea being that they wanted to invest in it regularly, or they wanted to invest in it one time, however they wanted it. But if you have 20 stocks in a portfolio, like you said, it takes 20 orders. Sometimes those orders don't go through exactly. And then, like you said, they have to track it because you have to track it as a group. Now, none of the brokers allowed tagging. Now, some of them do, but earlier it was not possible to tag because you may have 50 stocks, out of which 20 are mine. So, how much is that 20 done versus the remaining? These are things, the questions that haven't been easily answered. But Smallcase has changed that game, because what they said is allowed a person like an RI to say, listen, you got 20 stocks, to go there, do one click and you're done. All you need to know is the amount of money you want to invest. And, and then you want to invest in it regularly. But the point about it is this hosts on top of the Smallcase ecosystem, which gives two things. Firstly, I think access to the convenience of the workflow. So you reduce the friction in investing in 20 stocks versus one. And 20 stocks is actually a good, now you have 40, I think. So you can do 40 stocks at one time. But the second part is it gives you access to brokers who would otherwise not want to sell your products. Which is quite interesting, because I would love to hear about your thought processes. Is the publisher, how does it work? And also, how did it evolve? Did you imagine it in the beginning to be what it is now, or is it remarkably different from when you started off as a concept?
Yeah. So let me actually break this into three parts. Okay. The first one is more around regulatory framework and compliance, right? Because when, like in your question, we talked about multiple activities, right? And actually, all of these activities have to be segregated completely, right? A broker's primary function is to execute trades on the exchange, right? An advisor's primary function is to give advice, right? Similarly, a research analyst's primary function is to give research, right? Now, just because there were no bridges between them, right? A broker also used to sometimes give advice or give research, right? Or vice versa, like advisor would try and find out one or two brokers with whom they can send Excels or have an order execution integration or something like that, right? So if like it was just a need of the time also, I would say that there has to be a system, right, which provides these different capital market participants to offer their services in silos in a compliant manner, but still talk to each other, right? Because from a customer's perspective, unless and until all of these things are talking to each other, it's not making sense for him, right? Because he is taking advice from the advisor, but if he cannot execute the advice, what's the use of the advice in the first place, right? Similarly, if he has a broking account, right? Let's say, as you mentioned, there are a lot of new age brokers who have come up, right? But if they don't have a mechanism to help customers take consume advice and execute, right? At some point in time, customers might not make the right decisions and move out of the capital market ecosystem, right? So it was very important that they first, like, the services are segregated. Advisor is providing advice, broker is providing execution, research analyst is providing research, but there is a system that comes and integrates all of them so that from a user's perspective everything is smooth and efficient, right? So that is essentially what is a small case ecosystem today, right? And the second part, which is essentially now the platform part, right, is what how do we build a solution which we can take to investment advisors or research analysts and help them integrate with the brokers, right? That's the publisher platform that we spoke about, right? So it's like a solution which can solve all the business needs of the publisher in or a research analyst or investment advisor in one single go, from automating their portfolio creation management process to issuing rebalances, ensuring like giving them a dedicated website, handling their subscription management, their payments, their invoicing, their client communication. All of these things comes together into one single platform, right? Because, like, if you don't have this platform, and I'm sure, given that you have been in the industry for a very long time, you would know that if you have to serve 200 customers manually, you might need a 10 member or 15 member team just for that, right? And scaling becomes a Herculean task. But with publisher like platform, right, an investment advisor research analyst can serve up to 2,000, 20,000 customers, but with just one or two employees, because his primary job now completely moves to giving the advice or the research, right? And coming to the last part of the question, which is the technology which is required to essentially power the whole thing, it goes back to the discussion that we were having in the last question, that we have built these custom platforms for each of the brokers, right? But given that now we have access to each of the brokers, we can bring together everything into a standardized format, right? This is something what you can, like, if you have to give an example, is something like a UPI, right? That banks are very, very different, right? But UPI is just a standard protocol. There's a standard set of APIs through which you can talk to everyone, right? Now we also have a solution like that today, that there's a standard set of APIs through which you can talk to every broker, right? Now the same solution we couple with the publisher platform, give it to the advisor so that their clients can execute across different brokers, and the same solution now we're in a position to give it out to other non-broking entities also to help them access the broking space.
Broker network, yes. Oh, this is interesting. Vasanth, what are your thoughts on it?
No, absolutely. I think what Anugrah also mentioned, it didn't start out that way. When we thought about publisher ecosystem and the platform, etc., it started user first to say that we knew at right from the start that at some point, because like I mentioned earlier, we are not a research house ourselves, right? We started off with the idea of saying we'll create this new product class or instrument class where there will be different strategies, at some point more manufacturers or creators of these strategies as well. So it came from that aspect that the user should get a wide catalog, which is where you can't just do it as one manufacturer setup. You will need more manufacturers to play. That was one use case. Another use case was when we went live with, say, some of the brokers who had their own in-house research also. They had portfolios, they had model portfolios. I think they came from the perspective that, oh, you said you're not going to do research or compete on research, so let us also put our portfolios up there. So that what we were doing manually had to start becoming a lot more platform oriented. There needed to be a interface, a CMS for them to actually use so that they could publish their own small cases. That was one use case. So from their perspective, it just became workflow optimization, because if you see how broker research works, they give model portfolios, and they also give, say, single stocks and calls and all of that. Obviously, every research team or the broker would want their customers to buy a portfolio, because it makes sense for new investors to take portfolio exposure versus individual stocks. But the workflow was horrible there, because we
Just
talked
to
about
buy,
this, like 20
yes.
stocks, you'll have to buy them individually. What you get in is an Excel sheet, right? To convert that into your portfolio requires hours and different platforms. So that was one use case. Another use case started happening, what Anugrah mentioned, that it started streamlining operations for a lot of research firms and advisories, where they did not have to have an army to, like, for every 50 people they had, they didn't need to add 2 more people to their team to manage their operations, collect contract notes, check whether the
Subscription
client is
expiries,
investing,
yes.
all of that. Tech can solve that much easier. uh, for example, many research analyst advisors today are now starting to charge a percentage based fee on the investment value, because now they have insight into what the customer's net worth is in a small case or a portfolio. Earlier, you could never get that. As in, you were just giving out the research, you would not know how much the person is invested. So you would have to always charge a fixed fee or a flat fee always. uh, it started many people, it's actually, the whole creator economy thing that we're seeing is happening in fund management also now. People, emerging managers, are starting off with the small case form factor itself, because the publisher platform helps them start, run, and grow their business. Established managers are coming to the small cases platform so that they can target retail. So today it's a lot of use cases. Obviously, we didn't envision all of this at the start, but now it's become, a very vibrant kind of community where different use cases, applications, and people are coming together to create this whole catalog of small
Yeah,
cases.
and I think, in fact, the whole software world is like that, right? You build a software and you don't know how your customers use it, and you find out they're using it in the strangest ways, and then you kind of build on top of that, and suddenly you get your, like, for instance, you are also the Plaid for or the UPI for the industry, providing the APIs, and that came about because you were providing publisher APIs and you had the backend integration with this. So new doors open simply because of use cases which you haven't imagined before. Very interesting, because I think overall, the software is eating the world in a way, and you can see this literally live in the in the industry, in the broking industry, and so on. Brokers are the old traditional brokers are worried that they're going to lose market share simply because they don't have the technology to attract or retain customers. And the new brokers are saying, listen, everything is table stakes. If you need integrations, we have to be there from day one. But I think from a user standpoint, so I'll come back to where this thing is. So I'm thinking, now you have a user comes in and sees. So today, if they go to, say, capitalmind.smallcase.com, there's potentially one or two small cases that we offer, and they know maybe about Capital Mind. That's why they've come there. But small case is a bigger, broader, industry term of sorts. So when people come to small case, they might be looking at 100, 200, sometimes 500 different small cases. I'm just saying that, it's grown over time. So the problem that said, I don't know which stocks to select, therefore give me a portfolio, has now become, I don't know which small case to select, give me a portfolio, give me a figure. So what are your thoughts on how you kind of try to address that problem? Because do you need now an advisor to choose which small case? And that, it may be an ecosystem that's actually preferable at some level, but it's the same way that you need an advisor to go into mutual funds, where the mutual fund selects 20, 30 stocks to invest in, or 50, 100 stocks to invest in. Where do you see this problem of too much happening in the small case ecosystem?
Sure. So actually, the advantage of having an ecosystem approach versus a single platform approach is that there are multiple entry points, right? And you yourself mentioned one of them. For example, if you are an advisor, right, who just wants to talk to his customers, right, and is not interested in any other jazz, right? You don't want to be on the small case app, you don't want to be on the small case website, you don't want to talk to any broker, nothing. You have 20 customers, you just want to give advice to them, right? We have a solution for you. Because the way we have built our systems and architecture is that they are very open in nature, right? So we can give you a customized solution where there is a custom website created for you. In your case, it is capitalmind.smallcase.com. In any other advisor's case, it would be advisor.smallcase.com, right? Now the clients directly come there. If you're running just one single portfolio, they see only one single portfolio, and then they execute, right? Now, this is one of the examples where an advisor is running his own business without getting distracted from anything else that's happening in the ecosystem, right? Now, the another use case is, let's say, if a broker is onboarding users onto the small cases platform, right? So as I told you that for all the 12 different brokers, we have 12 different platforms that we have built and deployed, right? So let's say if a customer is coming into the small case ecosystem from HDFC Securities platform, and HDFC Securities has selected a bunch of 5 to 10 different small cases which they want to onboard their customers too, right? So the customer will only see those 5 or 10 small cases. He will never actually see 500 small cases or 300 small cases, right? So that becomes the second touch point, right? Now, for example, if there is an advisor who was tied up with, let's say, a broker or a research analyst, right? And he is selected a particular portfolio to get the user into the small case ecosystem. In that case, also again, the user sees only one single small case, right? So the only use case when the user is seeing a lot of small cases is when he's directly coming onto the small case app, right? Which is, let's say, one of the 5 different ways in which you can enter a small case ecosystem, right? Now there also we have built tools and let's say solutions through which user is very easily able to categorize and differentiate between different small cases, right? And obviously, in terms of improving the customer experience, there are a lot of other things that still needs to be done onto the platform. But today we have tools like Find Me a Small Case, where you can start first by only looking at asset allocation as small cases. If you are new to the capital markets ecosystem, don't want to take a lot of risk, you start with just that, right? Then let's say if you want to take a little more extra risk, right, then you can see large cap small cases, right? So we are trying to break down the journey and make it easier for the customer in the most natural way in which the actual investing should be happening. That you first build your core through an asset allocation portfolio, then you add a little slow moving satellites through your large cap portfolios, then you go into the mid and small cap section, right? So the platform is built and designed around the core satellite philosophy, that if a customer is not being brought into the ecosystem by an advisor, by a research analyst, by a broker, or by a referrer, then he follows this natural progression, so that again that problem is not faced by him, right? So if he's coming from any of the 4 channels that I mentioned initially, he is never actually seeing all of these small cases. He starts in a very focused manner. But if he's coming on our website or app, there is a natural core satellite approach that the customer goes through and essentially ends up discovering different small cases.
And also, there are a lot of ways, how people invest. And small cases, it's. I don't think it's like a structural design issue that if the number of small cases of the catalog keeps increasing, it's going to get tougher. It is with any investment product right now. Number of stocks will keep increasing, but how do you select stocks? One is a research provider, an advisor, like Anugrah mentioned. Say you have principles or philosophies around how to select your stocks, etc. A friend tells you a stock, someone in your network tells you one, you do your research. So there are so many ways to kind of select the right investment products that this we will have to adapt into kind of all of them. Like uh, today you can create your own small case and share it. Like till date, I think number last when we checked last month was like 25 lakh people have created and shared their own small cases, and other people have saved and started investing in them. So
Wow.
that's one way that people actually discover and decide. So very tough to kind of have a one ideal approach to portfolio building.
Discovering,
So
yes.
as a product class, our attempt, or at least our focus, is towards ensuring that all these use cases or applications can be available on the platform. And it's not easy, as in we discover new ways of this happening every time. We would love for the workflow that you described, that advisors actually tell you which small cases to
But I mean,
do it.
it's just
But
a thought process.
again,
Yeah.
that's what that ecosystem needs to expand. There a new workflow, this is a new channel, how do we get there? So I think still barely scratching the surface of all the different use cases. And like within a small case also, today we have stocks, ETFs. If we have more asset classes, it could evolve into financial planning. So there's just so many things that we could do with this construct. So number of small cases will keep increasing. I think we just have to figure out
How
how
to,
to
yeah, I
how the
mean,
user finds them.
to be fair, I mean, there's the next level. I mean, I'm just throwing things in the air, but you can have friends on the platform where you can say, कि देखो मैंने invest किया, आप देखो. The other person says, oh, okay, this is great. I want to share it with my friends as well. So, I mean, all those right now, it is more. Share my small case would be like either share the link or you send an email from the platform, whereas the established Facebookish, friendish, it's complicated kind of algorithm is possibly another thing that, I mean, it's the rules are endless, and like you said, it need not even be stocks. It can be anything that is bought and sold on the platform. Listed universe, because we're all, you can't sell toothpaste, for instance, on that would be a little, too much. But okay, I think this is interesting from a perspective of a selection of a small case. I think small case selection is one part, and it's a useful part to solve. But the next part of it, which is always like the performance part. So I think a lot of times, and we've talked about. I think we've had agreements and disagreements on this in the past. But the interesting thing is the performance itself of a person's small case can be different from the model portfolio. Similar to the investor in a mutual fund can get a different return from the mutual fund itself, simply because of when he invests, how much money he puts in different times. He puts in 10 rupees, it becomes 20. But after he puts 100 rupees at the second time, that 120 grows only to 130 or 140. So the return depends on how much money he puts in when and all that. But also with regard to the timing of the investment in the small case. By nature, small case has to give you a price. So it uses today, if you're investing, it'll use the weight based on the calculation of the previous day's prices. But I think you have some thought processes which are coming up where you will say, why don't you tell me the returns if I had not invested on the yesterday's price, if I'd invested on today's price instead? Because at today, I don't know, I mean, I can't get yesterday's prices. And in a bull market like now, unfortunately, or fortunately maybe for the universe, prices run away. And as more popular and popular stocks, so for instance, the traditional thing is, if a stock is mentioned on a certain TV channel, that stock, by the time you are able to even get to the market, it's up 5%. Similarly, if a stock is in a very popular small case, the chances are you. So how do you handle these performance differences between customers' actual returns versus the model portfolio returns, and how do you envisage this going forward as well?
Sure. So, first, let me just give a little bit of textbookish answer in the sense that how we have designed the whole thing, right? So, there is a what I shouldn't be calling it benchmark, but there is a portfolio or an index, right? That like model portfolio, what you are referring to, right? And that a advisor has created, right? Now, different people are coming and subscribing into this portfolio. This is somewhat very similar to, let's say, there is an index, let's say a Nifty 50 or a Nifty Next 50, on which ETFs are getting built, right? Now, ETF is one of the ways of taking exposure, right? We can say that small cases are one of the ways of taking exposure, right? Now, it is not like an ETF is replicating the index without a cost, right? There are different ETFs in India with different expense ratios, right? Sometimes expense ratio just goes completely off. Also, we have seen multiple times, right? So there is always going to be some cost associated with replication in any of the form factors across the globe, right? So it's not like there cannot be any solution that can exist which can replicate the exact return given by either an index or a model portfolio. Just impossible, right? So that's the textbookish way, that there is always going to be some cost associated with replicating a strategy, right? Now, in case like in small cases, like from our perspective, right, the way the whole system or solution has been built is very, very personalized, right? When you are investing into a small case, we are creating a custom index for you, right? You are picking your advisor, right? We, at no point in time, the system is going and telling that this is the small case that you have to invest in, or this is the best advisor who's offering the best performance or anything like that, right? So because the system has been built to give that personalized solution to the investor, right, the costs are also very personal, right? Because you are replicating the strategy of your choice at a time you think probably this is, like, there are some people who, let's say, if you are issuing a rebalance on a Tuesday night, right, some people might be doing it on, let's say, Wednesday
Thursday.
morning, some people might be doing it on Thursday evening, some people might be doing it on Monday evening also, right? So it is all a reflection of what essentially you are doing, right? There is no standard suggestion that we give that, okay, you have to execute the next day, you have to, because there is, like, we have to give it to the users also. There, like, everyone is not free at 9:30 in the morning, right?
Yes, of
Or at
course.
3:30 when the market is closing, and they will execute when essentially they get the time, right? Now, because of there would be certain differences from the model portfolio, which if it works for the users, they would continue taking the services of that particular research analyst or advisor. And if it doesn't, obviously they will think that okay, this is not something which is working for us. But at the end of it, it is still far, far, far better compared to going the old way of taking an advice from a PDF in an Excel and not even being able to execute. At least in this case, they are able to take advice from a licensed professional, right, and execute in an easy and understandable manner. So we have come 99. There's still that 1% remaining, which probably at some point in time. Now the question is that how do we ensure that we come up with more tools so that they are able to understand what could be the cost if they are executing at different points in time, and if at all there is a way of bringing this cost down, right? But at least today, the investors are at far better place compared to what they were when the small case was not there.
Absolutely, absolutely. And I also think um, it's a little unfair to ask you about costs because the costs could be spread across various things. Like, for instance, we were talking about this just a little bit earlier, saying STT, it's a cost to the customer. But if you invest in a mutual fund, the mutual fund pays STT but does not report that STT as a cost in its total expense ratio. It's allowed to not report it. So therefore, your expense ratio sounds like 0.01%, 0.05%. Those ratios are not true. It's actually 0.25, 0.3%, which we can see in the difference in returns. But reported returns are reported costs are very different from actual costs. And I guess what you're also saying is, in your case, the slippage between the model portfolio and the actual return is based on perhaps timing, perhaps the price of the security itself, which could be extremely volatile. For instance, if it goes into a small case and at the same time a big news has come, what can you do? At that time, the stock price will differ from the model per se. So yeah, I mean, I think
yeah, and like just to add to it, given that obviously this has been bull run for the last 1 or 2 years, but like we have seen like downturns also. So like for example, since 2000, I think since end of Jan Feb 2018 till mid of 2019, like mid and small cap section of the markets were not doing anything good, right? So there were times when customers used to come and say, okay, I think we should execute 2 days after because because stocks are falling, right? So like it's just a given that different people have seen different or have different experiences on the platform. Some people have seen stocks just go up because they have come in the last 1 year. Certain people who have seen over the last 3-4 years understand that yes, there will be slippages, but at least in 5 to 10 years of time horizon, I am much better if I'm taking a portfolio diversified exposure under the guidance of a licensed professional versus doing everything by myself. So I'm okay taking those slippages because there will be times when there will be positive slippages, there will be times when there will be negative slippages, right? This question only comes in when essentially the time horizon is very short, right? Because if you're talking about, let's say, 1 year or 2 year, and there is only, let's say, bull market, then you can come and complain that, oh, this because of the slippages, my returns were not good, right? But if we take a 10-year horizon, right? So the same effect that is happening on, let's say, negative side might start happening on the positive side also. We don't know, right? So in the long term, the customer is still far, far, far better placed on the small case platform just because there's a diversified portfolio exposure under a, let's say, licensed professional. That's it.
Yeah, I think it makes sense. I mean, also, see, I think eventually SEBI has, for instance, already standardized the performance reporting of mutual funds. Last in 2020 for PMS providers also, it said, please standardize your reporting. Basically, we have to report in a certain way, time-weighted ratio of returns and all that. And I suppose eventually they will impose their laws on what they will put in. So that's not a big, and hopefully there'll be more transparency than less. I think small case is very transparent. PMS is also to a certain extent transparent. Mutual funds have a layer of non-transparency. You can't exactly pinpoint how much was spent in X versus Y, even if you looked at their annual report. So
yeah. Like just because we're talking about the transparency, right? A small case, is a structure where at no point in time uh, either the advisor or the platform is coming in contact with your money or your shares, right? Your shares always go into your demat account. Your money is either always in your broking account or your bank account, right? So that's the beauty, that there cannot be a fraud. It's impossible that it can be there, because the shares never move out of your demat account and the money never goes out of your trading or broking account, right? It's just that because it's a bull run and probably certain stocks just keep going up, we are having these
Yeah, no. I
discussions.
mean, you'll have the other side also, because somebody's trying to sell and the stock is on lower circuit and things like that. So the performance, at what point do you take it? For instance, I can say that, listen, a stock is on lower circuit. You said you have sold at 100, but by the time I get to sell it is 60. How come your performance is so different from mine? And I know that it's a fundamental question you cannot answer. And we face this challenge ourselves as a research provider as well, where we said, okay, listen, we'll stop. We won't even record the price until our people are actually able to exit. But you can't do that in an automated platform, because how do you not have a price when the stock has to be sold? I mean, it's just meaningless for that. So I think evolutionary parts of it is also that education has to come in. That people should not take returns at face value. They should go back in and say, listen, there's a range of returns. So
Yeah,
if
and
the
like
model,
not just the education, I think we as a platform also would have to evolve so that we can also start showing these things to the users.
so for instance, I mean, like what we've done is at the PMS, and at the PMS, we have control over the portfolio. So we control the execution, but still we see difference between our model portfolio execution and each individual client. Even if you take the time weighted risk and return of every single customer in a portfolio, you find that some person has got, say, 15% return, some person has got 12%, some person has got 14. So the system may tell you that on average everybody has made 13 and a half. Some people have got above, some people have got below. The guys who got above, of course, will not look at it, but it's the persons. So you'll get those questions. And if the market falls the same other side, yeah, how come I have fallen more than the market when somebody else has fallen less? And it's a interesting problem to solve. But as you said, it's the platform's responsibility at one level. It's the customer's responsibility at another level, because everybody has to go through the cycle once. It's like if I wrote the same answer in a question paper and I gave it to two different teachers, they will mark you differently. And you can always ask, I wrote the same answer, unless it's maths, when answer is pakka. Here it's gray, and the gray is you did 931 versus 932 to the other guy. It's the part of the game. But that's and I think this is where it becomes interesting, because now you've got scale. You've got a lot more people on the platform, and I know you. I'd love to hear all the numbers parts from you guys, but also investors in your company have been interested. Now you started off with maybe smaller rounds and stuff like that. Now you've raised 40 million. There is, there is 40 million USD, which is 300 crores. This is such a big number that it almost astounds me that. But I mean, congratulations firstly on this round, and I know it's been a labor of love for you to have built this so far and taken it. And but obviously you have, like, what you've done till now is 1x, and what you got in mind is 10x. So what's next? What's the where does it go from here? Do you where do you see yourself? Are you I'll let you answer that, because I think this is more about you than it is about my thoughts on it.
No, sure, Deepak. Thanks so much. I think one thing that we've been really fortunate and lucky to have from the start has been, a great people around us, be it, with our team, with our partners, and as well as our investor partners and shareholders, right? Like, we've got a good mix, right, from venture capital funds, private equity players, to institutions who've been in the space for a long time, to even individuals on the cap table, so who have actually been financial services entrepreneurs themselves. So we've got a great mix of both institutions and individuals who believe in what we're doing, have very strong conviction in the model that we're also choosing to do. So very, very thankful and grateful for that. I think that's something that has helped us a lot along the way. With This capital specifically, sure, there's multiple things to be done on a short-term basis. Continue enhancing the platform, build more capabilities, add more channels, keep growing the ecosystem. I think, but if I look at it from a very, more long-term perspective, I think few things. One is, I think we've been very focused on, what the mission has been right from the start, and that's not to do everything, or just look at it from saying, okay, the can we do this, can we do that, etc. But it's been just focused towards one thing: can we build the best investment product layer for investors? And I think that's what we'll continue building. That's where we are seeing, at least I think, a change in that layer. And that's what we thought, say, 5 years back when we started out, saying with more investors participating in equities, with more of their portfolios going into equities, the product layer needs to change. That hadn't changed for decades. So I think that's where we'll continue focusing on. Small cases is one type of investment product. Tomorrow there could be other types of investment products that make sense for an investor's portfolio, and I think that's what we'll keep focusing on. The second thing, I think we are very proud about this as well, that we've been able to build a very distinctive brand in this space, right? So and it's something that is a collaborative, inclusive brand versus saying it's either this or that. As in, for example, Capital Mind offers small cases are available on Kotak Securities. So it's that brand has become very interesting because in the last 2 years we've seen so many new investors come in, and small cases have become like a primary gateway for them to access stocks and ETFs. So I think continuing to invest into that brand and make it much larger is also going to be. And it's not just about monetary or capital investment, right? There's We built that with a lot of love and care. I think that's where we think that's required to take it to the next level. I think this capital also really helps us.
In fact, I don't know if you want to share any numbers, but I know you've gone to what numbers that you've told me. I mean, if you can, tell us about how many people have now from the time to started to where you are now. I'm not sure if this is something that you want to, but we would love to hear those as well. So,
Sure. So, like from say number of the investor base or the number of users, I think we've grown really fast over the last couple of years. It's a 5-year journey for us till date. Obviously, many more years to go. But in that 5 years, we spoke about it. Like first 3 years was just laying down the pipes, building the plumbing, and last 2 years we've been able to enjoy the platform, the asset that we built, and hence continue to grow. So today, how we look at it also and measure is that if there are today, I think the number is somewhere between 2 to 2.5 crore active demat accounts. When we, like 3 years back, that number I think would have been 0.5 crores, right? So we've grown 4-5x from there. And how we think about it is that the penetration of small cases into portfolios of investors who are active in the demat construct should keep on increasing more than a absolute number for us to keep growing on. So that number today for us is like 1 in 7. 1 in 7 demat account holders use small cases. So 15%, 32 lakh users on the platform, and that's grown by 7-8x over the last 1.5 years. Like I think we started 2020 with 7 lakhs. So that's been kind of, we've been fortunate to have built the plumbing and the platform so that when
so many more could come in.
more interest came in, I think we could just enjoy getting them onto the platform as well.
This is great. Yes, Anugrah, I mean, your thoughts as well. If you're where you're going.
I think Vasanth summarized it very well, but just one point is that like why we have been able to offer a very smooth and efficient experience in the equity space. Right now, I'm not talking about like capital markets. Like the only equity space is because underlying stocks were liquid, as well as the ecosystem in terms of brokers were open to, let's say, let us do this. Right, it might have taken a little bit of time to get there, but it finally happened. Right now, today, that is not the case in other asset class. in India, other asset classes in India, right? For example, if you look at the bonds, right, they're not very liquid and are not accessible. They might be liquid for institutions, but from a retail perspective, right, and they're not very accessible also, right. But I would say that we are not there in terms of whether the like ecosystem around bonds is matured enough so that a layer can be built on top of it, right? But with the capital and the customer base that we have now, I think probably we might be able to explore and do some things there. If at all we are able to do that, then essentially that asset class automatically gets added to our whole ecosystem, right? That people will be able to directly do it from their demat accounts via logging in by their brokers. Advisors will be able to create portfolios around those securities through our, let's say, gateway. Non-broking entities might be able to sell fixed income securities, right? And there's just one asset class, right? And there could be different other asset classes that we can explore and probably add. But one thing that we are absolutely sure in terms of what we want to add to the platform is that it should be, the experience should not go down for the customers, right? Because we think that so many new investors have picked a Smallcase, right, as their default mode for starting their investment journeys, is that experience is best in class in terms of what they get, let's say either probably on a Swiggy or on Flipkart or an Amazon. There is no compromise on experience just because you want to invest, right? The technology experience should be world class, then and then only the ecosystem will also expand and people will also come in, right? So if through more capital, obviously we have more resources, if we are able to replicate some of this in the other asset classes, that's something that we would be like, we are very interested in exploring.
This is actually quite good. I mean, I can see potential. There's US, non-India. There is bonds, like you've mentioned. There are so many of these new investment products where again you need a portfolio approach, not a single. एक bond खरीदने से क्या होगा type thing, you know. So it's like एक bond ही खरीदना है तो you might as well do a fixed deposit. Now I want to do portfolio, this that. So these are actually quite interesting, and on the publisher end, because you've got a lot of publishers on the platform, and to the extent that you've kind of highlighted your process of getting them on board. Do you see this as more a platform that you want to build as a platform, curated platform of advisors or people who offer solutions, or more like a generally a platform where any RIA can come and present? Because when you curate, you automatically may say, oh, I have curated, I have seen, but at the same time it leads to this lack of discovery of the newest people who don't have enough pedigree, or so we came from nowhere. So if in a way anybody, the next person could also come from nowhere, and therefore where do you see yourself there? More democratizing, or do you think more curation is in your future?
Sure. So actually, on the first part, right, I think in terms of doing the basic checks, SEBI is doing the job. So we don't want to get there because I'm sure the regulator is looking at all the requirements, be it in terms of capital adequacy, be it in terms of education and everything else, right? So one thing that we are absolutely 100% sure is that we want to only work with the licensed professionals who the regulator has allowed to operate in the ecosystem, right? And but after that, there are multiple ways in which we today also we deal with them, and tomorrow also we might deal with them, right? Today, as I was explaining to you, that an advisor can choose, or a research analyst can choose to be completely away from the ecosystem and operate in silo, right? So that the system is flexible enough to just give him that solution, that he can just get a website where everything works normally. It is integrated with all the brokers, and he can just directly get his clients onto that particular website, right? Now the second part, essentially, where there are different advisors, where we can essentially be on a lookout that acha, if there are certain good people who are coming in, how do we ensure that they get the attention, they get the highlight, right? So there, essentially, we have some thoughts but haven't started implementing anything yet onto the platform. But that's something which is very, very interesting, because as Vasanth was also mentioning, that like this whole creator economy is what's happening in the fund management also, right?
Correct.
There are so many new upcoming and very good advisors and research analysts, right, who might not have the let's say legacy of 10-15 years, or let's say an AUM to back their analysis or portfolios. But they also deserve to be, like, their research also deserves to be shown to the users, right? So yes, our systems and algorithms will have to evolve in a manner that we can do some bit of heavy lifting on that side, but we haven't started doing that yet.
This is quite, because I guess one of the things that you'll have, and Covester, I remember, had this problem of people gaming their systems. And I'm not saying that anybody's doing it right now, but as you get more and more popular, I'm sure people will try to use a small case to increase the prices of certain stocks, and try and make it popular. And it'll be your Covester, the people involved, as used to say that, we used to spend an inordinate amount of time trying to remove away people who used to recommend only liquid stocks on the platform. And so maybe Smallcase has a role to play, I guess, over there.
Yeah, but the biggest advantage that we have, that why anything like that cannot happen, is that nothing happens automatically in the system.
Correct.
For everything, user consent is required. At no point in time it can happen that either an advisor or your friend or someone has suggested something and something automatically gets executed, right? And all of these are retail investors who have gone through the subscription process and have put in small amounts of money. And every time when they're executing a trade, the same RMS, OMS systems are, let's say, of the broker is put in place, and they are authenticating every single trade, right? So it can never happen that on one single click, crores of money just moves from here to there. It's impossible.
Yep.
Because if, let's say, 10,000 people have invested into a portfolio, it needs 20,000 clicks by 10,000 different investors at probably same number of time instances, right? So it's just impossible that such gaming can happen in a small case
In the
ecosystem.
small case. That makes sense. I think also, from a perspective of also from a aspect of looking at the customer, you have your small cases of your own. So Windmill Capital, I think, is part of small case ecosystem, and as in the small case in a promoter company, if you may, but also you have publisher small cases. And now that Amazon is your investor, and I'm going to shamelessly say that this is like an Amazon Basics problem. So Amazon Basics does, so you compete with your own other vendors on the platform at some level. How do you handle this conflict? Because in your own mind, you must be at some point saying, which one should I give impetus to, and how do I do this in a way that's meaningful? So how do you handle this tension, if you may, within small case?
Sure. So I think the first thing where it like sort of differs from the analogy that you were using is that when we started the small case ecosystem, right? To begin with, it was not an ecosystem or a marketplace or anything like that, right? To begin with, the only set of portfolios that were available on the platform were created by our research team, right? And the reason to have a research team in the very first place was that when we are starting, right, just like it took a lot of time to convince brokers to come onto the platform, right? It also took a lot of time to convince advisors to come onto the platform, right? Now, if advisors are not there on the platform, or let's say for the first 2 years we didn't have a ready product also to take to them, right? Then if the customers are coming onto the platform, what will they invest into, right? So from that perspective itself, there was no other option but to ensure that from day one there is quality research available onto the platform, and there are different sort of use cases also which are available that a customer can try out, right? And that was the very reason why we in the very first place put up a research team, right? Now, let's say if we cut to like from 2016 we come to 2020, right? Actually, the total number, like if you talk about the percentage of users who are investing into windmill created small cases, have reduced.
I see.
Right?
Percentage wise.
It's not the other way around where it is increasing, right? Because in 2016 it was 100%, right? Today it is very, very less compared to that, right? On the contrary, we have actually gone out, onboarded all these advisors, got them onto our platform, and contributed probably 60 to 70% of of their business directly from us, right? So that's the conflicting. So that's how essentially the timeline has played out, right? So today, if you look at it from let's say just at a cross section, you might see that, oh, you have your own subsidiary. So how do you differentiate or anything like that? But if you look at from this perspective and context, right? So you would understand that why in the very first place it was required, and how then it further essentially got changed, and how we are actually looking at all the advisors or research analysts who are there onto the platform. And today also, I think in no means we differentiate between any in-house or external publisher in terms of how users experience them, how users subscribe them, or probably how users explores them, right? And in terms of small cases also that our in-house research team has created, right? I don't think there is any use case also which matches that. If let's say you are creating momentum in small cases, similarly momentum in small cases are coming out from the in-house research team, or vice versa, right? So from that perspective, I think we are very, very sorted in the sense that the job of the in-house research team is always ensure that there are differentiated use cases which are available onto the platform, and job of the ecosystem is to ensure that we get more and more creators into the ecosystem and ensure that everyone is fairly treated.
I think basically the crux of what Anugrah said also was, okay, if this was a video, we could have put the Amit Shah meme and said, "Aap chronology samajhiye." But I think it's different from Amazon Basics, because there you're talking about products that are commodities, right? As in, that's where Amazon Basics or Amazon as a platform looks at what the reviews are, or at least people claim that Amazon does this, where they look at the reviews, they look at the price points, and then unleash competitive offerings that you can replace with this. But say, I think for small cases, the more relevant equivalent would be, say, Spotify originals or say Netflix originals,
Yes.
where it's a lot more subjective. It's not a commodity kind of a service or an offering. So, and that's where what Anugrah mentioned, the last point, where it's a very different philosophy of research or product building itself. We have a certain set of products, we continue to build that. There have been so many instances where users have come and said, hey, why don't you have this small case? That doesn't mean that we will create that small case, because we might not have the capability or even understand how to actually create that product, where we go to the right manager and say, this is a request from users getting popular, do you want to build this kind of a solution? So it's a very skill based input, which
Versus yeah, no, I mean, I get it. I think I don't think publishers who are who have done enough research on they won't look at this as, oh, when they're competing with us. The only, like for instance, even in Swiggy, you can go and buy from a Swiggy kitchen or from a non-Swiggy kitchen, and you might not notice the difference because the food choice is yours, and in a way but the challenges roughly are the same in the sense, because it's your own kitchen. Do you give it a preference? Right now I don't think that's the case. We're not like listing
no,
all
but there also in the Swiggy example, the output or the service that the user is looking for is food. So that's very commodity in the sense, if it's a burger, maybe Swiggy could have a different taste on a burger versus a McDonald's one, but it's still, you can replace one with the other. Here, your portfolio can be made up of so many different things. That's why I'm equating it to
Stocks,
something
yeah.
like music or say entertainment, where it's very subjective. It's not like
So
you
Netflix,
watch a thriller, that means you don't like this, which is where
yeah, so Netflix original is possibly not more attractive than say a Disney original.
correct. Everybody
Because
has to
simply people watch different things. Yeah, I mean that makes sense. I think that's a good point.
Yeah, and like the just to add to what Vasanth mentioned, right? The retail participation in the capital market in India is so low, and on top of it, if you just think that how many people are actually taking advisory services, right? I don't think any advisor should be thinking about competing with
Yeah,
anyone.
no,
It's
these are
it's a matter of
thousands,
how do
so
you
yeah.
expand the ecosystem.
Honestly, we're with 30 lakh crores in equity mutual funds added together, 35 lakh crores, 16% of the whole ecosystem of the whole GDP sits in that, versus America's 110%. So just as an example, so your ability to, and the number of investors that invest in stocks versus other things is different. They classify ETFs as a different universe altogether. So India is so small that the incremental differential between even 1 year ago to now, 1 year ago, I think in the last 4 months from April 2021 to July 2021, more than 35 or 40 lakh investors have been added to broker accounts. That means more new broker accounts have been created. Now, people would have been happy with 10 lakhs in one full year. And now in 4 months, you have 40. The incremental difference is so high. It doesn't, I mean, like you said, it doesn't matter even if you compete.
Yeah.
So, kya farak padta hai? Because in the end, the market is growing at the rate that it doesn't seem to matter. But it's interesting because I think you also now have another way for people to participate. Oh, you said, okay, I'll create a small case as a publisher and I can make it happen. But let us say my business was not, and there's a whole gateway ecosystem now. The idea of the gateway is to take the small case platform that you built, the fact that you've got all the broker connects in place, and fuse them back into a solution that says, listen, you don't need to have a small case in order to execute with the broker. And you have now really made it into a bunch of APIs. Now, again, we are going to be, I think, as Capital Mind also is going to be a participant in this ecosystem. But the idea here is that you could use Gateway as a way to execute trades without actually having to integrate with each individual broker, but to directly provide a solution where you may have like you said, I think the content or the material in order to be able to execute a trade, because a customer wants to not leave the context which you are in, the web page, the app, or whatever, and directly buy. So the gateway, I mean, is an interesting offshoot, is perhaps related to how you've built the brokerage platform products, but also now it gives you this flexibility of going bigger. So why please explain how the gateway ecosystem, what it means to small case going forward.
No, sure, Deepak. I think just taking a step back here, it's not just the idea was not to say, can we get executions everywhere, right? As in for the sake of it, because today we are seeing Gateway used at maybe 30 different properties, and there are clear use cases, and a lot more partners are coming in and wanting to integrate the APIs. But I think the idea came from the seed that for exchange traded products to really flourish and more people participating in them, you can't restrict it to just the brokers having on or only on the broker shelf spaces, right? Because if you look at, say, products which are household brands now, financial products, be it gold, be it digital gold now, be it mutual funds, lending is a feature, as many people say. So all of that has been possible because it's not just one type of entity that can offer these products. It's just become easier for any platform, app, property, uh, entity to start offering. So that was where the idea for Gateway really came in, saying, as we discussed, there is a compliance restriction that you, for a stock or an exchange traded product to be transacted, it has to be done on a broker approved platform.
Correct.
We had integrated with all the brokers in that manner. Now we had the opportunity to actually abstract that transaction capability into APIs and SDKs that then could be used by anybody else. And this happened in different ways. One was, we ourselves needed it for internal use cases that we're building. A bunch of properties and apps that were thinking of doing this, when they were talking to brokers to give them the APIs, the brokers themselves said, we've done this for multiple quarters already with Smallcase. They're providing, they might have it. Why don't you ask them? So, the idea came from, again, multiple different viewpoints, and that's where we started building Gateway. But I think it's been now 18 months since we built Gateway, but getting those use cases today, it seems very obvious, that yes, you why do you have to become a broker? Rather use the Smallcase Gateway or the broking gateway that they have built. But at that point, we had to create these use cases or create the demand for these use cases. For example, money control is a great example, right? Like, this is something that's happening in other industries, other areas where content meets commerce. So money control has data, it has information, it has stock pages, it also has stories around certain stocks. So can you transact from there itself? Another use case is, for example, say, distribution platforms or advisory platforms only offered mutual funds earlier because that was what they could offer. If they had to offer stocks, ETFs, or small cases, they had to become a broker. But now, using the Gateway, we are seeing many mutual fund distribution platforms actually expand their offerings, become a multi-asset class kind of advisory or distribution platform themselves. Used by so many other different use cases. We are seeing use cases like gifting stocks, gifting small cases, social investing. So it just opens up the possibilities, but more importantly, it also just extends exchange traded product distribution from just one set of entities, which is brokers, to anybody who has a digital property and has a use case for offering stocks and ETFs.
Yeah. So just to put like what Vasan mentioned in a nutshell, right? Just try to think how many people would be ordering food if you every time you had to log into HDFC Bank or an ICICI bank in order to just put your like place your order through Swiggy or anything, right? It's just impossible to imagine life, right? And because payment gateways or similar solutions exist, right? On top of it, multiple use cases have come, right? Similarly, if direct stock investing, right, or in general exchange traded products have to grow, or if multiple use cases have to come, right, it was just a matter of time that this had to happen, because without this it's just impossible for all of these use cases to flourish. But now with this, anyone who's trying to build a content platform or an advisory platform or anything to do with stocks or ETFs in India, right, it becomes extremely easy for them to just integrate a small let's say a solution in probably a week's time, and they have all the transactions available to them, right? So just the way you can place an order like from Swiggy, irrespective whether you have an account with HDFC, ICICI, or Kotak. Similarly, you can buy a stock from Money Control or any other property who is integrated with Gateway, irrespective of whether you have a broking or demat account with Zerodha or an HDFC or any of our partner brokers.
I know, Anugrah, if you think about it, I think this is basically in a way, it also works to a point where you're saying you don't have to be a small case provider. You can be a direct stock. So, for instance, I could say, we're writing about the stock. You can buy it online here. Now, I'm not actually giving you a recommendation to buy it. I'm actually saying you can transact it if you want. And if you want, you can click on this and then it'll tell you something. You have to enter how many stocks you want to buy and so on. But that ability now exists across the globe. So I don't have to do any broker integrations. I can do this through Smallcase Gateway. If you add 3 other brokers to your platform tomorrow, I automatically get access. So earlier there was a protocol called Fix. I mean, it's still there. US brokers are more technologically advanced. They have a Fix kind of protocol to do the same thing. But Fix has limitations. It's complicated. It's not easy to understand. And plus, most Indian brokers will not want to expose their OMS or RMS, risk management systems or order management systems, fix protocols directly to end customers. They understand it to a certain extent, but they don't know how to deal with the complexities of these systems. In that context, Gateway, so if I were to get it right, I think Gateway is more a product where you get a provider, and this you need a technology to do this. So it's not going to be like go to a web page and say, Ki, acha, now I want to buy this stock. The web page has to integrate with your API. But at the same time, it provides that ability to scale this much further from where we are.
Yeah. Actually, just to add to it, right, there are both types of solutions which are available. Okay. So, for example, if someone is like a little technologically advanced, they can integrate with the gateway solution. But let's say if you are a person who just writes block, right? You don't have any technological understanding in terms of how to do API integrations and everything. We have solutions for them also. In the sense that, for example, just the way you can embed a tweet onto the blog, right, or a YouTube video into the blog, right? Similarly, we have widgets where you just need to put a URL and the stock or the small case automatically gets embedded, right? And that doesn't require any technology integration. It's just copy paste of a URL.
Fantastic. Now this is great because I mean it's just like a little JavaScript that kind of sits and does something on the site, which is
it solves like both use cases, not just the transaction bit, but with this widget you get information as well.
Yes.
So like a newsletter that's talking about, say, for example, Tech Mahindra. Now you can embed a Tech Mahindra stock widget. You can see what today's price is, what its ratios are, the graph, etc., and then choose to buy it. So it just makes accessibility much easier.
So if we go on some of these websites and they say Tech Mahindra, then it'll show you plus 0.2%, because that's what it is today, and then provides contextual information. This is great. Actually, this is very interesting. Now, coming to where you are, I think you've grown to a certain extent and you've seen a lot of investors come onto your platform. There were maybe 32 lakh people now. So it's grown to a lot of people, possibly some of them are new investors, some of them are old. And perhaps as we come towards the end of this podcast, I want to ask you guys about, as much as you brought more people into this markets for the first time, some of them, and some of them for the first time as small case investors, you've probably come across a lot of investor behavior insights, which is what they are thinking, how they are doing things, and a lot of the old myths getting broken that only new people buy small cases. In my experience, a lot of the people that I know who are seasoned investors are also using small cases to invest, or only young people use. I say, when they're seasoned, they're most likely old, so that's also happening. We've also seen behavior change from the way they think about panicky fall markets, panicky rising markets, how investors used to behave versus perhaps as a small case how they're behaving. So, two questions. First, what are the investor behaviors you've seen over time, and how do you, with the fundraise and the thought process that a small case has, where do you see small case changing this behavior over time, and perhaps what advice you would have to your customers?
Sure. No, I think the first the first thing that we have noticed from our users or investors is that whether they are the first time investors or whether they are the seasoned investors, right? The single most important thing when you are building a financial product or an investing ecosystem is to ensure that you are transparent, right? People love transparency. They want to know where their money is going. They want to understand how the whole thing is working, right? Because it's like if you talk to anyone who's sort of build products, or any, let's say, any seasoned person who has built multiple products and all, sometimes you get to hear from them that you need to abstract a lot of things, you need to hide certain informations, you have to always give the customer just, let's say, an execution bit. You don't have to tell them what exactly is happening, how it's happening, and stuff like that, right? But what we are seeing is that the customer behavior has completely changed, right? People want to understand what's happening, right? Because if they are understanding, it gives them more confidence on the decisions that they are taking, right? And unless and until they don't have the confidence on the decisions that they are taking, right, it becomes very difficult to justify the investment decisions later on in life, right? Because, for example, you don't if you're just buying something because a friend has told you, or let's say you got something on a Telegram chat, or you saw a YouTube video, right? And in just that moment you end up doing something, right, without even understanding what's happening, right? Then it's going to be very difficult to justify the decision if it doesn't turn out to be the right decision, right? But in our case, what do we do is that we ensure that we present all the necessary information, right? Customer is able to understand where exactly the money is going, what is the philosophy, who's managing the portfolio, what are the stocks that they are buying. It might take them a little bit of time to understand all of these things, but actually it gives them the confidence to stick with their investments, right? And the most important thing in the capital market, as you also know, is to stick with your investments and let the system work, right? So this is something that we have noticed, and probably is like not the way traditionally products have been built, that you like it's fine to expose certain amount of information and let people take few decisions. You don't have to abstract all the decision making from them and just give them buy or sell stuff.
No, this is great. I think, sorry, Vasant, your thoughts as well. I mean, before I ask you more on this further.
No, many interesting observations. I think, there are some surprising ones, but maybe expected ones. Like earlier, if there was a correction in the market intraday, you would see people redeeming. But today, those turn out to be the days where there's maximum inflows into the platform, etc. So, some of those observations, for example, this was interesting to me. And this is primarily from younger folks who are entering the markets, but there there's a strong FOMO. So even if they're losing money on their investments, or there is loss, uh, they're just happy to be involved. So like, I'll tell you where I've seen this anecdotally also. Like, people, there's newspaper headline is say Nifty crashes or Sensex crashes, and now there's a feeling of involvement that even there's some impact on me directly, versus earlier it was not there. So those are some ways that people are also reacting. But even I'm an investor. I think we're all investors. So I think in behavior, we also face the same thing. At least I face this when I have a stock portfolio outside small case, as well as a small case portfolio of stock, portfolios within small cases as well. And it's really tough for me to, there's a lot of loss aversion or attachment to certain stocks. It makes it tough for me to take decisions. I delay it. I'm not sure. Maybe I just keep hoarding stocks because I don't want to sell them right now. Feel that maybe there's still more moment, etc. But when it's with a small case, whatever the manager or the strategy dictates, which is, you have to drop two stocks, add three stocks, it just becomes super simple to stick to that system. So I think, that has really changed at least my personal investing behavior also, where it's really tough to do that if you have, a stock portfolio that you're managing, versus with small cases it's just more easier because you're abstracting it with a portfolio view. So you're taking portfolio level decisions versus single stock level decisions. So that's really helped me at least to kind of stick to a system, be a lot more disciplined.
No, this, I think, this is so true, because a few days ago, there's this particular stock that was one of our portfolios, which we said, okay, let's exit. And our exit after that, and like the market is going to slap you in the face every day nowadays. So we get this stock going up another 15%. So then somebody calls me and says, Deepak, I didn't exit. I said, very good. And he says, okay, now what should I do? I said, okay, there is only two choices here, because we've exited the stock. So the best you can do is, if it falls 10% from here, please exit. So the next 2 days, and maybe it was fortunate now because I'm on the good side of this equation, is the stock does fall 10%. In fact, it falls 15% in one day. Now it has crossed to a point where it is low. It has fallen 15%. The person comes back to me and says, now it has fallen 15%. Do you think it's a good, I can hold it? I said, no, it's out of our portfolio. You also made a decision that you'll get out after 10%. But, what do you do? Now the person is stuck because they didn't take the action at the time that we had suggested it. They took their own action. Now it became their own stock. Now they're having the same problem exiting that stock, because personally it's that fight between your emotions. But if they'd followed the portfolio, they would not have had all these questions. They would have felt a little miserable that the stock went up 10%, felt a little good that it's back down 10%. But this is outsourcing of discipline. I think Smallcase does it beautifully, because you're saying that, listen, if you want the returns that this portfolio is giving you, or the philosophy that this portfolio is giving you, then you have to follow the portfolio. You can't question it, and then now you're in no man's land or no woman's land in many cases. That's something that we haven't talked about, but I think what will be interesting in the overall sequences to see how this discipline pans out in the future. But as much as I said that, and I know a lot of people are looking forward to small case being one of their gateways to investing in the future. So what advice would you give your investors? And as part of your investors, I guess even I'm one of them. As an investor, I'm a publisher as well. But at some level, you'll have more insights because of the collective than because of the individual. What advice, based on what you're thinking, would you give to investors in general, not stock specific, of course, but investors in general in small case in the days ahead?
Yeah. So I think like probably this is like a lot of people have already spoken about this, and this in general applies to everything in life. But it becomes extremely important when you're talking about capital markets, is to have the right expectation setting, right? Because if you are having an expectation of doubling your money in in a month, I don't know where you can do that, but definitely stock market is not the place for this, right? And one interesting thing that has happened is that over the last 1 year, right, a lot of new people have come into the market, as well as markets have also performed extremely well, right? And most of the people have made good money, right? If they have started, let's say, in the last 1.5 years, right? Now, because of this, the good part is that at least the first experience that they have, like they had with the markets, is positive, right? So they're going to remain in the market for some time, which is always good, right? But the bad part is that the expectations might have been set wrong, right? For example, if some certain portfolios which were launched in the last 1 year, if you would look at their CAGR, you would see, oh, they have generated 40% return, 50% return, right? And some investors might have come in with that expectation, right? So it becomes very important for investors to understand, and as well as a platform for us to communicate to investors that uh, this is not going to work in the long term. No equity portfolio is going to give you 40 to 50% return every year for the next 5 to 10 years. That's just impossible, right? So to set the right expectation that, okay, in the long term, I will be generating 15 to 20% return. There will be certain years when I'll make good money. There'll be certain years when I might lose money, right? It could be minus 20, minus 30%. But if I'm able to generate 15 to 20% in the long term, I should be happy, right? This is one of the very important things that a lot of people who have come in the last 1.5 years needs to understand. Because if they are able to understand this and follow a systematic approach, right, it will ensure that they remain in the market for the longer term. And if they're remaining in the market for the longer term, right, then they don't need to do anything. The market will do things for them.
Perfect. In fact, I mean, I'm a little disappointed, Anugrah. We have 50% returns in 6 months, and you're saying that I can't extrapolate it for the next few years. Yeah. But it is a real problem because people come to us and say, 2 days, market is down 2%. Arey, your portfolio is not performing.
Yeah.
2 days, 2%. Acha. But I'm also saying that in the past, we have seen 5 years or maybe 1 or 2 years. 5 years, market has almost never lost money in India. But let's say 1 or 2 years, I'm sure there'll be negative returns. And like you said, it's important to moderate expectations, and that low double digits is the more important thing than this. Every month I'll get 10%. You find the YouTube videos. I'm sure you've seen them as well.
Yeah.
And it cringes because you say that, okay, everybody is going to learn a lesson eventually, but hopefully that happens. But Vasant, your thoughts and your advice to.
I think couple anecdotal observations I've seen is one is very cliched, but then people generally start out with one thing and then do only that for some time. Like whenever they're starting out with investing their money, I think either if it's crypto, it's crypto. If it's derivatives, it's derivatives. Intraday, it's intraday. But then they do it for some time, thinking that that's the only thing to do. And then eventually they understand that there are other asset classes. This one asset class or this one way of investing is not going to be sustainable over the long term, and then move to actually having a portfolio of different asset classes. So however cliche it might sound, I think practicing asset allocation right from day one makes a lot of sense, just purely because it does not then impact with your psychology or mental balance or behavior, etc. Because you will do that at some point. Today, for every asset class, there are such new interesting ways to actually access that asset class. It's not the old ones. Like real estate is not just buying land or buying a house now. There are so many more liquid, less more cost effective ways to actually access it. It just makes sense to start do that from day one. Second is, I think there's this whole class of people who are not participating in equity markets, or even investing, as in their money is in the bank account. And I think that's kind of what all of us as a collective ecosystem, I'm not just talking about us capital markets, but every single asset class ecosystem is dealing with, is trying to get money from the bank accounts into better yielding asset classes. And that's where a lot of people who actually start investing, there's this now almost like weird obsession with, say, fees, in the sense, once they do come in, as in, if you're not investing at all, then there's no concept of fees. But when you start investing, a lot of people suddenly move to the other extreme of saying that, sure, how do I get the cheapest way to actually invest in something? And I think that's a little penny wise pound foolish in many cases, just purely because of the fact that you have to contextualize fees. As in, an index fund can give it to you at, say, 5 bips, great, but then that can't be your entire portfolio, right? Your portfolio has to have different risk return profiles, different products, different strategies, different exposures, and all of those will come with different fee or pricing models as well. So contextualizing fees with the kind of exposure, the kind of return profile you're looking at is important. A lot of people just say, okay, let me just get the cheapest product and that'll do the best job for me. Works in certain cases, doesn't work in many cases. So I think that's something that many people have a weird obsession around. So I think that not doesn't make sense for most of the decisions you take.
Yeah, and like just to build on this, so this is something that a lot of our users also keep asking. That why don't you give an option to compare different small case managers on the basis of fee, right? But that's not the right thing, because fee has to be one of the inputs in your decision process. It cannot be the sole criteria on the basis of which you are actually deciding what you want to invest in, right? So that is why we want to always ensure that people go through the different managers, they understand their philosophy, they understand the different kinds of products which are offered by them, and it's not just a plain simple fee comparison, right? And that's something that people need to follow across, like even if they're not investing in small cases, even if you're investing in mutual funds, or for that matter you are using a PMS route to access the capital markets, right? Fee is not just the only criteria, right? You have to look at the returns also, you have to understand the philosophy also, and you need to align the manager's philosophy with your philosophy. Then and then only you need to go ahead, like just not look at, like, looking at any single thing is wrong. You look at the returns, it's wrong. You look at the fee, it's wrong. You just look at the philosophy, don't understand the risk return profile, that is also wrong, right? So investing is an involved process, right? And people need to understand this, that whole concept of gamifying investing, right? Just ensuring everything is available at single click. A lot of people might come in, but a lot of people will fall away also, right? So people need to understand that if they want to grow their wealth, they need to give at least 1 hour a month minimum, right? That much expectation they need to set in, just to understand where their money is going, setting the right expectation, following a system, and then let the markets work for them.
I think I'm with you, because we offer a fee based small case, and to a large extent our fees are disproportionate sometimes to the amount of money sometimes people invest, and we also get perplexed. But then we realize over time that they will invest more money if they like the product, and therefore over time that product will actually be a smaller percentage as a fee to their overall portfolio. And this is obvious to some people, this is not obvious to others. I mean, for instance, what you end up paying for is partly education and partly transaction. So it's the sometimes the market can charge you a fee for the education that is sometimes many times more than any fee that you'll pay.
It's actually better if that doesn't happen. But
Yeah, I mean, the problem is, school of hard knocks, right? People learn, unfortunately, if you don't learn one way, you will learn the other. And um, but I mean, it's a great set of points, because I think the advice you're actually telling people is moderate your expectations. Don't think last year was a blueprint for the future. I hope it is not, because from a pandemic perspective and from a return perspective in the market, we don't think this will come back in any meaningful way in the future. The other point you're saying is asset allocate and diversify right from the beginning, because you may love the markets today, but tomorrow who knows what kind of things will come. So that's the other part that I think it's a very important thing, and small case allows you to do that. So there's a inbuilt system to do it. And of course the last thing is, don't obsess over fees being the criteria, or even I would say even anything that takes away from the investing thought process is a distraction. So the fees are one part. Of course, you can't say that every fee applies to everything. It's a input in the whole process, but it shouldn't be 100% of the process. Even within index funds in India, we have seen the lowest expense ratio index fund is often not the one which has given you the best correlated return with the Nifty. So even the best index fund cannot be judged on the base of its reported expenses. Therefore, you cannot equate process with the fees per se. This is great. In fact, it's been a long time. We've gone through recordings once, twice, and I think this has been great to have you guys here. Thanks so much, Anugrah and Vasanth. And please, any last words? And thanks so much for having come here.
Thanks a lot, Deepak, for inviting us. It's been great, and I think the parting thoughts would just be that like, people should not wait for things to happen. All right, life doesn't work like that. Investing also doesn't work like that. You have to take certain decisions, but just ensure that while you're taking the decisions, you have the right set of information. That's it. And Another thing is that we look forward to a lot more capital mind small cases on our platform.
Which, yes, definitely. I'll talk a little bit more about that. But first, Vasanth, please, thanks again for having been here and patiently waded through the process, both of you.
No, thanks so much, Deepak. It's completely our pleasure to be here, and look forward to doing this again sometime. Hopefully, with a lot more of new learnings, a lot more updates, as soon as possible. Yeah.
Absolutely. In fact, great. In fact, just as a disclosure, we have more portfolios coming, and hopefully all of them get integrated in one place. But there is a low volatility small case as well, apart from our momentum small case, and there is a passive small case as well, and there's so much more. I mean, I'm so excited about the whole small case platform that we want to put a lot more stuff into it. And we're also, of course, on capitalmind.smallcase.com. Smallcase is at smallcase.com. We have Capital Mind Premium, where we have a lot of the discussion around the portfolios and so on. There's we have a special fee for a special discount for the podcast listeners at CM Podcast is our discount code, and we'll enable it on the we've enabled it on the platform. So love to hear all of your thoughts. Whoever's listening as well, to come in, please tweet. I don't have the Twitter handles of Anugrah and Vasanth right away, but they're on Twitter as well. There's Smallcase on Twitter, that I know. Smallcase HQ, I think, is it? Is on Twitter itself. And I'm Deepak Shenoy. We're at capitalmind_in. Love to hear your thoughts. It's been great having you. Look at Smallcase as a gateway to your investing future, and I hope and I wish Smallcase and all of you as listeners as well a great investing future. Thanks for listening.